Welcome to the Expert Exchange. I'm Lindsey Melchuk. Today marks a pivotal moment for global markets as U.S. voters head to the polls in the closely watched presidential election. Candidates Kamala Harris and Donald Trump have campaigned nationwide, and today's outcome will set the tone for future economic and policy direction. Investors worldwide are holding steady, bracing for the potential market shifts driven by tonight's results. And joining me today is Michael Succurro, here to define the projection of what today's election looks like for your portfolio. So, today's the big day, Michael. What do you think?
It's an exciting day. It's a very tight race right now. I've been watching it live minute by minute, and they're currently tied at 49-49. There's a couple battleground states that are still going to be the deciding factor, like Pennsylvania and Georgia. But it's tight, and it has investors on the edge of their seats, whether they're Canadian or U.S. investors, or pretty much any investors in our market around the world. As you know, the U.S. is the powerhouse of North America, and really the deciding factor a lot of the time when it comes to these big shifts in the markets. Absolutely.
So whether an investor or not, I mean, the world is definitely watching right now. So let's talk about this. To begin with, let's talk about market indicators. What key indicators should the investors be watching across the board, watching closely in the days that follow to gauge shifts in market sentiment?
Yes, there's a lot of key indicators you should be looking at. The first one is the 10-year Treasury bond rate. So I myself, as a mortgage broker, that's what we're looking at, as we have a brokerage south of the border. And that helps us indicate the rates as to where they're going to be fluctuating, what the next announcement is going to be like. Are we going to see a rate decrease? How big of a decrease? Or are we going to see an increase as well? Because again, just like us up here in Canada, the U.S. is working towards fighting inflation that was caused due to post-COVID effects. So we're looking to see, okay, are we going to cut the rates? How fast are we going to cut these rates? And how's it going to affect the market? Because again, we want to incentivize buyers. The U.S. government and the Canadian government want to pick buying right back up. But at what cost is that going to take when it comes to cutting the rates? Another indicator is, again, just look at the S&P 500. There's actually a fear gauge stock, the VIX, that a lot of people look at as well. I'm not an expert in that, so I'm not going to dive too deep into that. But again, it's another indicator that should be looked at. And then also you want to look at the unemployment rate. Because funny enough, the U.S. had announced their new unemployment rate numbers last week in hopes to sway the voters one way or another. So the unemployment rate really does show an indication as to where the economy is headed. And again, who should you be voting for as a U.S. voter when looking to hopefully rectify and pick the economy back up?
That's right. I mean, it's all about the economy on both sides of the border, and no matter who's going in, it's going to affect one way or the other. So which sectors do you anticipate will experience the most volatility in the immediate aftermath of the election?
Yeah, so the top three in the immediate aftermath in the election are energy, healthcare and pharmaceuticals, and technology. And the main reason being is it has to do with the policies set in place by the Democrats or the Republicans. So also historically, if you look at the S&P 500 as an example, after an election, typically when there's a Republican that's put into power, there's actually a little bit of an uptick in the short term of the S&P 500, and then it settles out as the policies are put into place. And when there's a Democrat that wins, there's a little bit of a dip, nothing too major, but a slight dip. And then again, it sort of evens out as well as the policies are rolled out. But the main three to look at are technology, healthcare, and energy sectors.
So these are already pretty volatile on their own. So I'm really intrigued to see how that's going to shift in the coming days, the coming months, even over the next year, and whatever candidate makes it into position there. So how should investors position themselves to take advantage of any potential market swings with this?
Yeah, absolutely. Again, it's doing the proper research and understanding what policies are going to be in place with either party that wins. Because understanding, again, it's not going to be rolled out right away. Just like when we talk about the housing market, it takes 6 to 12 months to see the effect of any rate cuts. So it's the same with an election. You have to understand that, yes, the voting's happening today. And if it's a tie, this might even roll out into Saturday, is what they're already saying. But in that case, the next president is not going to be in place until January of 2025. So there's still time to reassess your portfolio, understand whose policies are going to be put in place based on who's winning, and how to set yourself up for success based on those policies that are going to be coming into place in 2025. So that's one thing I like to tell the investors is, again, it's not, don't rush into this. Don't go based off emotion. These, again, today's just the election, but these policies are not going to be put into place until 2025.
It is such a key insight right now. Do not move your portfolio. Don't do anything with your portfolio based on emotion. Let's just give you the knowledge that you need to move forward at whatever pace is good for you. Now, given the likelihood of policy shifts, what's the consensus on how this election outcome might affect the broader economic environment, particularly regarding interest rates and fiscal policy?
Well, what we're seeing is on the broader economical environment outside of the United States is, again, if Donald Trump is put into place, he is looking to impose larger tariffs, again, making America great again, which is great for their pockets, but not so great for our pockets. And what happens with that is, again, we may see higher costs. So let's take the Canadian economy into consideration. With these higher costs, they may want to reduce interest rates at an even steeper pace to ensure that there's, again, cash flow in the everyday consumer's pocket. Also, again, with these tariffs that might be imposed, we might see consumer spending decreasing in the Canadian economy.
So what impact could that have on a portfolio strategy?
Well, the impact could be, you have to understand your portfolio is how heavily based is it in the U.S. economy versus the Canadian economy, as well as the fact is the manufacturers of these products. So if there's a specific product, let's say, that is being manufactured in Canada, in Mexico, in China, that's going to be heavily taxed, how much is the cost going to be for that product to go up, and how much less likely is it going to be for a consumer to want to purchase that product, given that, again, the cost on the overall has gone up to manufacture that product.
Okay, so in your view, Michael, how consequential is this election to Canadians and the broader investor eyesight?
As an overall, I feel like, again, like I'd mentioned before we started here, is the U.S. is the powerhouse here in the West, and definitely the powerhouse of North America. So as much as we're our own company, our own country, but sometimes looked at as a company, as everything's a business, we still take a large effect depending on which way it swings, whether it's Democratic or Republican. So again, Canadian investors should be paying close attention to this election because it does affect, again, consumer spending, any investments, even the housing market. Because again, if we're going to be cutting rates, we're going to be hopefully increasing buyers to want to purchase more, but that may come at a risk of inflation in these prices again, like we saw in 2020.
Well, I know you and I are going to be sitting down in the next coming days to talk about housing specifically, and we should probably be discussing, what that means now that there's going to be a new decision south of the border. So, Michael, where will you be watching tonight?
I'm going to be watching at home. I'm probably going to be staying up late, given that it's going to be a very tight race. And right from there, I'm going to be looking at my game plan starting tomorrow morning as to what my shifts are going to be that I'm going to be making leading up to the new president coming into play in 2025.